Michael Pallozzi, welcome to the podcast. How are we doing this afternoon?
I am doing great. Thank you.
It's a pleasure to have you here. We were just saying before we started actually recording that we're both itching to get outside, which means we're recording in the late spring. For those of us who live in the Northeast, know what that means.
Yep. Yeah, it's a beautiful day today. I think it's in the low 70s, so it's
Ugh,
beautiful.
it's perfect weather. Well, I appreciate you being here. I'm excited for today's conversation. I think this is actually a first from a podcast topic perspective. I'm having a financial advisor on the call and just talking about this topic more in depth. So
hmm
thank you for being the lucky guest to
Sure.
dig into this.
I got the short straw, right?
Yes, but you're the best. You're the best person for it. Before we jump in, for those folks who don't know who you are, can you give us a quick little warm up? Know who you are, what you do, and where you're from?
Absolutely. So, Michael Pallozzi, I'm the president of HFM Investment Advisors, LLC, located in Glassboro, New Jersey, right outside if I'm sure this is a national audience. So
Mhm.
that's kind of right outside of Philadelphia area between Philadelphia and the Jersey Shore. A lot of people kind of get that destination. When a lot of people say New Jersey, they automatically think North Jersey and close to New
Yeah.
York. So I always like to say closer to Philadelphia, an Eagles fan, not a Giants fan. Um,
Nice. You're a welcomed guest on here then.
right. And so I've been in the financial industry world. This is all I've ever done my whole life. This is going into my 36th year of doing financial services. And currently, where we are today, I'm the president and CEO of our firm. We're an independent RIA, which stands for Registered Investment Advisory Firm. I have 11 full-time employees and 2 part-time interns that are working with us right now. We cover a wide variety of different topics on the financial services, and our market is working with entrepreneurs, but I won't get into all those details because I'm sure we'll get into that a little bit later.
Yes, absolutely. Well, thank you. And what's so nice here is that there's a lot of alignment between the types of folks you work with, being entrepreneurs, and that we work here at Nolan Consulting Group. So I always
hmm
love when there's kind of good alignment because we serve the same, population.
Sure, absolutely.
Before we jump into kind of the why we're here, the assessing financial advisors, what makes you kind of so passionate about working with small business owners, especially in this space?
So, especially in this space, my passion comes from the love of watching actually the entrepreneurs in their space, right?
Mm,
Because a lot of our clients are blue collar workers and they didn't go to college, most of them, for this. And most of them started out as a tradesperson working most likely for somebody else or just doing some side jobs. And then either through luck or hard work or sheer determination, whatever it would be, that fast forward, looking back, they're really successful. And
mhm.
so they became successful because of their passion for their trade. Most of them didn't become successful for the passion for the money. So
Yeah.
I love that about them because I love working with this industry because they have very, very small egos, which is what I love. And so they need and appreciate the help that we provide for them. And so that's what keeps me keep working with them is their passion for working with professional advisors, but not being overbearing. Just that they like the working relationship.
Yeah, that's huge. And that working relationship is so critical for the success of it working and being kind of a long-term relationship. And ultimately, I would imagine this type of work that you do, you look into to kind of work together for the long term.
Yes, our business is not transactional at all. When we take
Yeah.
on a client, we assume it's going to be for life
Mm.
because we work with multi-generation families and businesses. And so on both ends, we want to make sure that the financial and estate plans that we put together for the business owners are successful so that the next generation, whether they take on the business or it just gets sold and gets passed down to the next generation, that it's handled in good care. And
Yes.
so then I've also built our firm to mirror that because obviously I'm not going to be around forever, right? And
Hmm.
so we have a multitude of ages in our firm, and the youngest advisor is 24 years old, and I'm
Nice.
58. So we have everything in between. So I always tell our clients, fear not, if you outlive me, there's multiple generations behind
Yeah.
me, which is good. They feel comfort in that.
I love that. Again, there's just a lot of alignment with things that you said and things that we coach too. You fall into a really kind of great network that we're looking to continue to build into or grow. It's that our professional advisory network. And so,
hmm
here at Nolan Consulting Group, we have the privilege of working with so many business owners at different points in their career, at different points in their business life cycle. And when it comes to certain points, whether it is succession planning, or, we have a building value peer group. They're kind of in that mindset of building to sell. We need to bring in folks like yourself and, M&A attorneys and legal and bankers to help make those processes run more smoothly. We help with the framework, getting the systems in place. But when the fact of the matter is, when it comes to transactions and, making sure that the documents are correct, we need folks like yourself, in the room.
Correct.
The reason I wanted to bring you on here is just to talk about the financial advisory landscape. I mean, as you just said, the work that you do is not transactional. It's not a transactional business. You are looking to build relationships for the long term. But a lot of folks, I would say, especially younger business owners, maybe haven't tapped into the expertise of a financial advisor yet, or may not be working with the right one. There are a lot of misconceptions about this space. What are some common financial challenges that you see a lot of small business owners facing today, and especially when trying to build those relationships?
That's a great question. So some of the challenge I see as they're growing, one is managing cash flow, right? So understanding that business has to, one, be profitable from the beginning. A lot of times the business owner will just bid jobs and then become successful and not really understand what their margin should be in the business. And the reason why that's important from our perspective is, one, of course, you want to be a profitable business, but two, not only is the value of the business hopefully growing, but you need to also look at the profits from that business and how are you diversifying those assets in other areas. You have to reinvest in the business to continue to grow. But we always like to say that you should also diversify some of those profits into your own outside of the business, whether it's in a 401k plan, whether it's mutual funds, or whether it's real estate outside the business. We want to make sure that they are diversifying properly. So without understanding your cash flow, and if you're profitable, then everything else will not happen. So that's one of the mistakes we see. And then the other one we see a lot is that they don't take the time to connect with their professional advisors. They're so busy working in the business, they don't take the time to sit down with their professional advisors. And the one advisor that I always see them work with, which is great, is an accountant. And it's only because they have to get their tax return done.
Absolutely. Yes,
right?
100%. We see that it's the same answer as, do you have a bookkeeper? Well, I have an accountant. Not the same thing.
Not the same thing. So a lot of business owners, especially in this marketplace, unless they're exposed to it early on, don't realize the value of having multiple different professional advisors and having them all coordinate behind the scenes to benefit the owner for what they're trying to accomplish. A lot of times the business owner will say, I have my investment person, I have an insurance person, I have an accountant, I have an attorney, but none of them are talking to each other. And so there's a lot of missed opportunities with that miscommunication. So I always like to try and, when I'm involved, make sure that everyone is on the same page as best we can.
I love that. I mean, it leads really nicely into kind of my next question here about, the personal and business finances. They uniquely overlap in the world of entrepreneurship. And sometimes a lot of entrepreneurs get into business for that reason as well. There's, they've got that freedom. What's your perspective on that? And especially, in the work that you do?
Yeah, I like to tell the business owner that your business should be a vehicle to provide freedom of time and money and passion for what you want to do outside your work. Because if you're working in your business all day long and all you worry about is making money and making money and making money, well, that's great, but I think you need to enjoy life too, right? So there has to be a balance. And I like to look at the business should be the vehicle to provide your freedom of time, freedom of passion, freedom of relationships outside of the business. And so if you don't recognize that, people are always getting caught up with, I need to make more money, I need to make more money. Well, maybe you don't need to make more money. Maybe you need to spend more time with your family and friends and enjoy the good things in life if you're not doing that already. So I see that as a vehicle to provide those freedoms that business owners need and deserve.
Absolutely. But some also need rails, I would imagine, too. And knowing, there's quite the span of that freedom. Like you said, you want to have that freedom of being able to utilize that business as the vehicle for those things, but also doing so within kind of the guardrails of the law.
Correct.
Yes.
Correct. Absolutely.
And maybe I'm saying this because I am just exposed to working with a lot of small business owners these days, but there feels to be just a kind of a growing entrepreneurial energy, a lot of small business owners, more ability to kind of start and follow passions and create a business out of something. So that world has evolved from probably where it was 20 years ago. How has your industry evolved as well? And has it evolved in a way to match the needs of small business owners?
That's a really good question. So to your first part, I agree. Everybody thinks entrepreneurship is sexy.
Yeah.
Like with social media and have followers, and all of a sudden, you're an influencer. Everybody thinks they can make millions of dollars overnight by taking pictures of themselves and doing whatever they want to do, right?
Yeah.
That is not entrepreneurship at all. Entrepreneurship, as you know, is working hard, working long hours, grinding it out and working, to build a business, right? We want to build a self-managing company. So that's really important. Our industry has changed a lot. So if I were to flash back 35 years, it was, in my opinion, very transactional. I started out in the insurance business. So I sold a lot of life insurance and disability insurance and health insurance. To me, that was very transactional. And then over the years, what I tended to gravitate towards, because I did not like transactional business, I like being in relationships with my clients, right? Working with them and their family and their business growing, is that a trend, not everyone still, a lot of them has gone away from transaction to more consultative approach or more advisory practices, right? And those individuals that went from transaction usually, and maybe still are in the transaction business, usually are not independent. They're usually working for one of the larger institutions, whether it's a life insurance company or an investment company or a brokerage firm like a Merrill Lynch or Morgan Stanley. Although they may appear to the public to be independent, they're still working under the umbrella of these larger organizations, and they still tend to be more transactional. And the only advisors we've seen to be more advisory and to be more acting as, by the law, we have to act as a fiduciary for all of our clients, is being an independent advisor. And that is the only way by law you could be an independent advisor, or acting as a fiduciary, is if you're an independent advisor. And that's why we left the relationship with our insurance company, because we couldn't do that. We were bound by the rules that they had us work in terms of what we can say, what we can't say, the type of planning, and always having sales goals for us. And I never liked the sales goals because it was pressure and transaction, where I enjoyed the relationship type. So there was a conflict. And so some advisors stayed in that world. A small percentage of us left that world, and we work more as an advisor.
So are you seeing, just in your own space, kind of a growing number of independent firms pop up?
Yep. We're starting to see it more and more. And although there are more, we are still a very small percentage in the industry. I don't know the number, but I'm going to guess we're still under 15% of the entire industry is still is only independent. So it's still the big wirehouses and the big insurance companies have thousands and thousands of representatives under them.
Yeah. Your clients that you have now, how did they find you? How did they choose to go the independent route versus, with those big houses?
Usually it's from a relationship that we have with an existing client, right? So most of our business comes from referrals from existing clients. We've also developed a deep bench of centers of influences, whether they're accountants and attorneys, HR consultants, payroll companies. We have a good circle of influence that help us out. And so we work with each other's clients. And so once we develop those good relationships, that's where most of our business comes from.
That's amazing. The circle of influence can be pretty powerful. And ultimately it speaks to the work that you do. You would be kicked out of that circle of influence if your clients weren't happy with the work, or, your reputation as a firm wasn't holding up.
That's true.
So I do help it. I think it keeps folks accountable. They want to do good work, to get those referrals. They need to keep, in line in a sense.
I mean, if you're in this circle of influence group and we're all referring business to each other and you lose that trust, then there's an opportunity to lose not only your existing clients, but all future clients too. So you have to stay on your A game at all times.
Absolutely. Absolutely. All right, let's talk about evaluating the right advisor. So for listeners on this, who are listening today, whether they have a financial advisor relationship, or they're considering making a change, or they don't have one at all, it can be a daunting world to understand, what is the right relationship. I mean, I can even speak for myself personally, not being a business owner. When my husband and I decided to find a financial advisor a couple of years ago, we were kind of like, where do we start?
Where do you start?
Do we need one? We did, and we do. And so we started asking the people around us and getting referrals, and then having conversations with different people to kind of find the right match for us. But I would be the first to say I didn't know what qualifications or credentials I should be looking for. Like, what makes a financial advisor the right one or good
Mhm.
per se? For business owners, that it's even taken to up another notch. So, what would you say that you would recommend people look for?
That's a good question. And I would say that it's based on where, if we're focusing just on business owners
Hmm.
for the moment, it all depends on where they are in their financial world or in their life that they're going to need different types of advisors. For example, if they're just starting out and maybe their sales are, lower than other business owners, right? And they
Hmm.
just need some basic planning, maybe some insurance planning or maybe some cash flow planning or budgeting, maybe getting a basic will, right? I
Hmm.
don't think at that point you're not going to need someone very sophisticated or a comprehensive group behind them, right?
Okay.
But as that business owner grows and they become more successful, then therein lies the complexity of their life. They have more employees. Now they have to start thinking about benefits. They
Hmm.
have to start thinking about if they have a partnership agreements. If they're doing well profitably, they have to think about reducing their income taxes, right? And now maybe
Hmm.
they're having some children or maybe grandchildren in or out of the business. So there's lots of different complexity that a business owner eventually grows into, right?
Yep.
So you would, in my opinion, you would want to then not work with an advisor who is just selling a product or selling just an investment, because a lot of individuals who work for those large insurance companies or sometimes the broker dealers,
Hmm.
they work on commission only. So if their approach or their conversation with these advisors are very independent in terms of their advice, you need this insurance product or you need this investment or you need an IRA. It doesn't mean that advisor is not doing a good job. It's just that
Hmm.
maybe their training or their background or the firm that they're with is not the right firm that they should be with. I
Okay.
think an entrepreneur, in my opinion, should work with a firm like ours, that we are entrepreneurs. We are running a business. So I like
Hmm.
to tell my entrepreneurial clients, you're not only getting good financial advice, but you're consulting with another entrepreneur that is in the same shoes that you're in every single day. And we have the same issues. We have,
Yep.
employee issues, we have tax issues, we have cost issues, vendors, all that stuff. So we can not only talk about those things as an entrepreneur to entrepreneur, but our team together can help you with your income tax planning, your estate planning. So you would know if you're in the right advisory firm if they're asking you a lot of questions about your entire life. And even in the first couple of meetings, maybe not even recommending to buy anything, but just listening and
Hmm.
gathering it all in and then saying, hey, I hear what you're saying about your business. I hear some of these are your concerns. Let's address these first two. Let me give you a little example of what it would look like if you worked with us. Here's a sample of some of the ideas that we can do to help you out. And if you think that's of value, and if you think that that could be helpful, and you think that you envision us as a long-term relationship, then we
Hmm.
can move forward to the next step of engaging, as opposed to a lot of advisors. And I would say I did this when I was young because I didn't know any better.
Yeah.
I better sell something on this first meeting because I'm not going to get back,
Right.
right? So it's a different approach. So did that help give you a good
No,
example
it
on that?
absolutely does, because I think part of the feeling of it can feel daunting for folks is they get on that call with an advisor and they're feeling the pressure to purchase something, and they feel like maybe they should because the business is up and running, and they know that they need something, but what they're being sold isn't exactly what they need. But they
Hmm.
don't know that. They just feel like this. I guess this is what it is. I guess.
Correct. They don't know what else is out there.
Yeah.
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 And we find that a lot. A lot of business owners will start out with maybe their high school or college buddy or a referral from a neighbor. And that is a good way maybe to get started. But
Hmm.
we see as they get successful, as they hit in business 5 million in sales, 10, 15, 20 million in sales, their life becomes more complex and they have actually outgrown those advisors, not just the financial advisors, but a lot of times their accounting firm and their tax planner and their attorneys. And so we
Hmm.
see that. And a lot of times we will work with new clients that they start to realize they've outgrown their advisors, and they don't realize that until we have a conversation. We start asking them a lot of questions and they say, well, my advisors don't ask me any of these questions.
Yeah.
Why are you asking these questions? And it's just based on our experience experience and going back to our earlier conversation, our passion to help the business owner to make right decisions.
Are there, it might be hard to assess because obviously, you just said sometimes folks come to you and didn't even realize that maybe they weren't getting all the things that were out there to receive. But are there some, I don't want to say red flags, but are there some like things to be aware of that if a business owner is listening to this and thinking, these are some maybe triggers that are telling me it might be time for me to look elsewhere or to start, having conversations and, getting some consultations on the books?
The first one always is the red flag is income taxes, right?
Okay.
When business owners are doing well and they trust their current accountant, whether they're right or not, I've seen a lot of accountants just don't have the expertise to go to the next level of sophistication to be able to help address and minimize or provide solutions to the business owner's income tax problem. And so we see a lot of business owners paying way too much in taxes, either on an annual basis, right? Or when they are selling the business. There's lots of pre-planning work that could be done with a business owner, tax planning, that we could set them up to. You can never eliminate the sale, but with great planning, you could really minimize it really low. And a lot of times, again, with the trust, and sometimes even with larger firms, business owners will assume the tax planning they get is the best that they can get. And then we walked into situations, unfortunately, after the fact that we said, well, if you did this, this, and this, you would have saved X, sometimes in the millions of tax saving. And so always kind of second guess your accountant, right?
Okay.
I'm not saying accountants are bad, but just second guess your tax situation, right?
Yeah. We always say trust but verify.
Trust but verify. Exactly right. As Mr. Reagan would say.
Yes.
Right. Second would be another red flag is if your advisor is not asking to communicate and coordinate with all the other advisors. Like, we want to take a team approach. So if they're always just meeting one-on-one with the business owner, and they are assuming doing a great job. But like I said earlier, if there's not a coordination or at least a conversation with other advisors, at least maybe once a year, maybe every other year, coordinating that, there sometimes could be some gaps. So your advisor should be wanting to bring in other advisors, your other professional, to coordinate what's going on in your financial plan.
Makes a lot of sense. And now if someone is listening to this and thinking, oh, this sounds like me, I might need to, begin that search. What is the best way to find or to start making those connections? Reaching out to Michael Pallozzi, for one.
That'd be a great way.
But in other ways, for other folks, is it talking to peers in their network and asking questions about, who they're utilizing?
Yeah, that's a loaded question, because if they're asking other peers in their network, let's say they go to their accountant or they go to their attorney, that's hopefully on the assumption that their attorney is aligned with high quality advisors also. I think the best route would probably be to ask other business owners their experience with their team of advisors, not just a financial, but their team of advisors, and how are they working together for the business owner's best interest, and what results and value have they seen from that. And you're going to get a lot of different answers.
Yeah.
And if you ask 10 different business owners, you may get 10 different answers, but you'll start to see the ones that you would want to gravitate towards, the ones that are more team oriented versus more transactional and product oriented. And so maybe that's how they should gravitate. So you definitely want to ask other business owners. And then, of course, you definitely want to ask your current advisors, because the business owner's closest professional advisor usually is their CPA. And so that's probably the best place to start, is talking with their CPA.
How does the importance of industry knowledge versus just kind of financial advisory knowledge and experience kind of play into finding the right fit? I mean, I know you and I share we share probably some similar client or industry types. How big of a role does that play in a successful relationship, or does it?
Industry meaning the clients that we serve?
Yeah.
Yep.
Like just being aware of how their industry works and trends that you see. I mean, does a financial advisor have to be experienced within an industry to have a good relationship and set their client up for success?
That's a great question. My partner Jason and I were having this conversation on Monday, actually,
because
we specialize in working with contractors and home-based service businesses, right? And advice you give business owners pretty much is consistent across the board, right? They own
Yes.
businesses, they have valuations, they have income taxes, they may sell it, all that stuff. But if you have a specific niche and you understand their industry and their pains, whether it's union versus non-union jobs, prevailing wages versus regular, if you understand that a little bit more, it only lends to the credibility and the trust that you're the person who understands that industry. Will the advice be dramatically different? Probably not, because if I'm working with an engineering firm that needs a 401k retirement plan and I'm working with an HVAC company that needs a 401k retirement plan, they're pretty much going to be the same type of plans, right? There's not going to be
Yeah.
much difference. Maybe the match is different or something like that. So great question. It just builds that credibility in industry that, hey, they understand, our industry because they have a lot of clients in that industry.
And you can speak the language. And I think that
Mhm.
goes a long way. I mean, I even think about it for us here at Nola Consulting Group. We work primarily, pretty much only with contractors.
Mhm.
Now, we have worked with other business types in the past, B&Bs, restaurant, physical therapy, but we've always come back to
Mhm.
the contractor space. And like you said, business can be business. That we can apply budgets and do business planning and work on development of people and building teams. But when you can really dive deep into the language and understand industry trends, I think it does make you better. It does
Mhm.
help that relationship for sure.
Definitely. There's a lot of positives to that.
When thinking about, let's say, trajectory wise, retirement planning for business owners versus traditional employees, obviously, the 401k, portion being a part of it, does it make sense for business owners that their financial advisor should also be offering their retirement planning for their business, or do you see that being separate?
I think it should be the
Okay.
same advisory firm. Now, in our firm, we have two distinct divisions, one that does the wealth management and estate planning,
Mm-hmm.
and one that does the 401ks. So we have a team
Got it.
dedicated as a specialty for each because they both require a certain amount of knowledge and abilities to service them properly. Out there a lot is someone who specializes in wealth management and very good at it. The business owner says, hey, will you also do my 401k? And of course, the advisor says, yes, I will, right? Because why wouldn't they?
Mm-hmm.
And that they don't have the team or expertise to manage that plan properly. And not that they're doing anything wrong, but there are some things that they're going to be missing as a fiduciary. So one, I think it's important that the same firm manages both for coordination, but also what we see a lot with our clients when we do year-end tax planning and we then involve their CPA or accounting, right?
Mm-hmm.
We then know where their tax liability may be going into the third or fourth quarter. And then so we could then recommend how much they could or should be putting into the appropriate retirement vehicles. And it's seamless because we're doing it behind the scenes. And if we can max out their 401k contributions for tax deductions, it's not like we have to pull in different individuals or different companies. We can all do it very seamlessly. So we spend a lot of time not communicating with the business owner, maybe more with the CPA, the payroll company, coordinating the deductions, like a lot of it behind the scene, the record keepers for the 401k, getting it all done. So the business owner's like, okay, I hired my advisory team. They're taking care of it. They're maxing out our contributions. We're getting the best deductions that we can for the year. And it's all done kind of
Yeah.
behind the scenes. And a lot of companies, we have that just on routine maintenance, that this is what we do.
Yep.
And so business owners just appreciate that coordination.
Yeah, I love how you keep coming back to kind of that team perspective, that
Mhm.
team of advisors. I mean, ultimately, that's what's going to be the most transformative for your business is when, you have these professional advisors in your world, but then they know each other and are working kind of in collaboration to get you the most, opportunity. I also look at it from an interesting, different perspective. We just released a podcast actually this morning on crisis planning. And we've unfortunately have experienced with business owners that we have worked through some pretty tragic, events that have happened
Mhm.
that were either, the business owner has passed or is, not able to work, in the business for a determined period amount of time. And the power behind having that crisis plan that
Mhm.
includes, an advisory council of folks, like yourself and an
Mhm.
attorney and, some close mentors that would do anything for you, that can basically help the business set up to be able to continue, or the business will fail without you.
Absolutely. No,
I
that's
can
great. I
imagine
can't wait to
you've
listen to that
seen
one.
that.
That sounds like a good podcast. Yeah.
Well, I'll tell you, we kept it pretty brief and succinct because I think that's the nature of we say it's a non-negotiable.
All
Every
right.
business owner, we don't care how young you are, if you've got employees, you got to have a crisis plan in place for,
Yep.
your operations. I can imagine you have seen some unfortunate situations, happen in your
hmm
kind of your experience and being pulled into those and having in those situations, have you had times where you've known other folks, as part of that team and then where you haven't and how it changed or how that
Yeah,
experience was different?
it's totally different. Fire drill versus another day at the job. It really is, because all of a sudden, the team that we really didn't know that well in that situation,
Mm-hmm.
everyone wants to be the man in charge, right? And everyone wants to
Yep.
take full control for whatever their underlying reason may be, right?
Yep.
We'll leave it there.
Yeah.
And so it becomes very contentious that who's really taking charge,
Yep.
as opposed to a better situation where everybody already has been working together. Everybody knows their role and responsibility. Everybody kind of falls in line, and it's just, like I said, another day at the job. And this is something we've planned for,
Mm-hmm.
and this is something now that we just have to execute, unfortunately, on it. But yes.
Yep.
Yep. And then another part leading up to that is when I talked about earlier, the advantage of having an entrepreneur to entrepreneur conversation relationship is one of the things that we strive on for our company is to have a self-managing company. And so a self-managing company is the viewpoint that my business should be able to run without me, even if I'm here, right? I should
Out of
be
the
able to,
hourglass.
right?
Yes.
There you go.
Yep.
So I should be able to go and do whatever I have to do, and the business should be running on their own.
Yep.
And so I try and implore those idealistic terminology and plan of action to all my business owners, because you want it to be able to run. If you're not here because you passed away or you became disabled, you want it to run on its own. And we
Yeah.
just had a situation with an associate friend of mine where the business owner had a soap business, and it was, I think, 40 employees and 10 children.
Wow.
And he died suddenly of an accident at age 50 years old. And his wife told the owner's brother, is one of the best things that ever happened was that the company is a self-managing company, and it's going to continue to run and not miss a beat.
Yep.
So the importance of having, not only a plan in place, but having a self-managing company is critical.
Yeah, absolutely. And then good people to rely on who know how to execute the plan.
Exactly.
It's huge. Yeah, because we look at it like you don't want your loved ones trying to figure out how to handle the business at the same time that they're dealing with grief. And so it's, you hope it's a plan that you never have to utilize, but thank God that you have it if you do. Yeah, I didn't think about that kind of before we were coming into this conversation, but I love that you keep going back to that team of folks that a business owner should be surrounding them with. And it's not only about, the growth of the business and the opportunity to, grow personal wealth, but it's also there when times are rough.
Definitely. And you pull together. That's when you pull together
Yeah.
to stand behind the business owner and say, I know this is not a great time and we don't like being here, but we can plan for this, and we have planned for it, and we'll get through it together.
Absolutely. To wrap up this conversation, what final advice would you give to a listener here, a business owner who is currently without professional financial guidance for their business? What would be the first step or two that you would encourage them to take?
The first step that I would think they should take is get a gauge, if they can, of where they are with their own financial house, right? If they feel that their house is in disarray, and then recognize that and address it and find maybe an advisor or a team that can help them get where they should be at a level playing field, right? If they are doing really well and, they're making good income, that make sure, based on our conversations today, make sure the conversations that they're having with their either individual advisors or their team, that are they all talking to each other? Are they all communicating and helping, working together for the business owner and for the business and them personally? Because although it's separate, it's all one, in my opinion. The business and their personal asset, it's all one. It's one personal net worth statement, and on that personal net worth statement is the value of your business. And so, yes, a lot of business owners see them separately, but they overlap and they are one. So kind of look inward and saying, okay, am I getting the right communication? Because they're not going to know if they're getting the right advice, right?
Such a good point.
They're with these current advisors because they trust them. So they're just going to assume it's the right advice. So
what kind of communication? That's actually something I meant to ask you. What kind of cadence should folks be expecting in a communication, channel from their financial advisor?
It all depends on where they are in the relationship of the relationship, but at a minimum, at least 3 times a year, at a minimum, sometimes quarterly, right? And in the beginning stage, stages, sometimes we're talking on a monthly basis till we get from where you were, I'll call it chaos, right?
Yeah.
Going from chaos to calmness is it may take monthly meetings to get it all through, maybe for a year and a half. Once everything's in good order, then it's routine maintenance from there. And so 3 times a year, maybe 4 times a year, sometimes twice a year. It all
Yep.
depends. And then as business grows and things change, then it may revert back to being more often. So you should at least always be in touch to know what's going on and have the pulse of what's going on with the business.
I love it. That makes so much sense. Michael, for folks who want to connect with you further, what's the best way to find you?
So on our website is hfmadvisors.com. Our website is probably the best way to do that.
Mm-hmm.
My phone number is 856-232-2270. And my email address is mpallozzi, Pallozzi, at hfmadvisors.com. So any of the above works.
Awesome. I will be sure to link that in the show notes as well.
Great.
So for folks who want to make a connection, I really appreciate you kind of bringing us into this world. I know we only scratched the surface, kind of, on just, we know what to look for and just kind of beginning to assess. I certainly would love to have you on for future conversations and going a little bit deeper down some of the rabbit holes, because it will also be a good learning lesson for me. I always say part of what I love doing podcasting and being in the host is I learn so much from different verticals. So I'm going to approach it as a learning experience for me too when we do another conversation.
Whenever you need me, I'm here.
So we'll say until next time.
That's right.
Awesome. Thank you so much.
You're welcome.